diving into Ethereum and the L2 architecture and what this looks like for crypto. It's going to be important because this will showcase maybe where some of the front-running revenue will be. So make sure and stick around. My name is Paul Barron. Welcome back into Tech Path. A couple of things to hit on here, and I want to get into about all of this today, but I want to get to our sponsor today, and that is, of course, Tangem. And of course, this is one of the best and most secure ways to get into self-custody. It's pretty cool because you can, of course, use their card along with the app, which I think is one of the slicker ones out there, to store all of your tokens, all of your projects that you're investing in. And of course, instead of going the route of centralized exchanges. So this is the place to start. All you have to do is hit the Get Tangem button. That'll take you over to the 3-card set. Get that one. You want that extra card. And make sure and use our link down below. All right, let's go over to the topic for today. And of course, this is VanEck and their estimation of what L2s would be worth by 2030. You know, spoiler alert, 1 trillion. Now, what does that mean for Ethereum going forward? A lot in this report to break down. This is by Matt Siegel and Patrick Bush out of VanEck. Matt's been on our show before a couple of times. He did overview, let me kind of zoom in on some of these notes right here. Ethereum's dominance in smart contract faces critical hurdle. This is scalability. It's something we talked about quite often here on the show, meaning that you've got to have the L2s in place to be able to really almost do any kind of transaction out there on Ethereum. The world's financial system will need to process more than Ethereum's long-term limit of around 19.2 USDC or 6.8 Uniswap trades per second. If you look at where the potential of this technology can go, we do need higher speed, for obvious reasons, even if you go into the retail systems, when you think about how many transactions people like Visa are promoting. At its core, Ethereum's primary challenge is limited capacity and process, store, and compute data from the form of financial institutions. So this is going to be the biggest challenge because this is where most of it's going to be used. Obviously, some of it will be used in gaming and other components of blockchain, but the development is now concentrated on enhancing its ability to integrate compressed transaction data from these L2s. So, and this includes projects like Polygon and many others, you know, ZK Sync. We've talked about Optimism, Arbitrum, etc. Further in the report, there's a couple of points here I want to make. The base economics of ZKUs and ORUs are very similar to those of L1 blockchain. So both types of rollups make money when users create activity on their chains, and then they pay fees over to ETH, right? So all the L2s price their transactions in ETH because that's basically the token. So ETH, their transactions lower, but still riding on the ETH blockchain. And remember, this is what contributes to that bigger overarching L2 revenue center, which is going to be $1 trillion. So imagine where Ethereum could be by then. Here's the estimated total L2 profitability. And if you look at the total to L2 margin, this is where it boils down to a handful of projects out there, including Polygon, Scroll, and Linea, really that would be in a position where they're actually making money, or you know, the projects are making money. So that in itself, very interesting. Revenue per transaction a little different, but overall, the margin is still stuck on things like Polygon. All right, so one other option on Layer-2's is now Solana and Eclipse and what they're trying to do. I want to go to a clip that is talking about Eclipse because this is a very unique model. And I'll show this in comparison to a Neon EVM, which is the alternative to it. Listen in.
So Eclipse mainnet is a general purpose L2, and we've kind of combined the best pieces of the modular stack. So like I said, we are using the Solana virtual machine. We're leveraging the security properties from Ethereum. We're leveraging ETH as the gas token. So this actually translates to a couple things when it comes to user experience. So of course, like fast and cheap transactions, that's a huge one. Fee spikes for a single app don't impact the rest of the chain. So this one isn't super black and white, but I think Solana has done a better job at like an approximation of a local fee market. And even recently with 4844, I think a lot of the L2s have had like sub 1 cent fees, which is amazing. But even I think yesterday or the day before, there was, I think, $5 transaction fees on base because there was just like this execution bottleneck, right? So you're still seeing fee spikes on the entire chain. So we actually ran a benchmarking on Eclipse and just see how it like compares. But our average time was actually 34 milliseconds per swap. So significantly faster than really any existing L2. So I think our performance in transaction fees will be comparable to Solana. And we've been thinking a lot about all the different types of things that you can build, like net new crypto apps, on-chain foreign exchange trading. And we had a couple more like consumer-facing ideas, so less DeFi. I think this will enable a lot more cool NFT minting mechanisms. And DPINs also would be a really interesting consumer use case because it requires low fees to continuously like stream payments to service providers.
What Eclipse is trying to do there, obviously, is trying to get into understanding how to make this easier, because with all these L2s, it is going to complicate things and get things kind of really more difficult to use for the average user. And I think that's the challenge that they get into. Let me kind of cut to this clip, and you can kind of hear what they say about this.
So Eclipse actually started as a RAS provider, so rollups as a service. And at one point, we were running dozens of chains ourselves, all these app-specific rollups. And from there, we just realized that there is something fundamentally flawed on this, 1,000 rollup thesis, because one core issue is, first of all, I think most apps are not going to reach the transaction threshold to make it economical for them to run their own rollup, right? And then number two, the main issue is there's a lot of user experience like fragmentation when it comes to every single app being its own rollup. Eventually, maybe we'll get to a world where we'll have less interop issues, but as it stands right now, it just makes for a terrible user experience.
All right, so if you compare this does, now we start seeing possibly Solana as an L2 for Ethereum. I know it gets a little bit confusing here. The key here is getting to transactions at scale, and that is a big part of this, which is why projects like Neon have come in and started to go in this. So Neon EVM is a good example. It's on the other side of things. They're trying to do this within the ETH ecosystem. Let me cut to this clip.
We have the token here right now. Let's just send it to, let's say, this account. I just sent 50 tokens here. So right now, we are transferring from one account to another EVM account, but underlyingly, we will also perform the SPL transfer in Solana network. So it's confirmed. So basically, currently, you'll be able to pay with any token that you have. Currently, we'll start supporting 4 or 5 tokens, USDT, USDC, Solana, and Neon. And you'll be able to pay with any of them when creating a transaction. You can see we have Neon. So yeah, basically you have like, let's see, Neon Sol, so you'll be able to pay with Sol, or let's say Neon to pay with Neon. So you have just different networks, but actually it will be the same network. Also, you can deploy ERC20 token in our chain that is basically a Solana SPL token under the hood.
All right, so the matchup there, as you see, is Solana and Ethereum, kind of in essence, the strategies of these projects working in unison to really kind of attack this whole issue around scale. And scale has been the thing that we've talked about so much around not only L2s, but just the ability to become a utility base for whether it's financial transactions, game transactions, all the things that will need to happen on the blockchain. Further into this, Ethereum is getting into how L2 activity helped its fees remain steady. Now, this is, I think many people would still argue, hey, Paul, fees are high on ETH right now, and they've continued to be high. And if you look at that, yeah, sure, there's been some consistency right there. But Base right now is dominating the ETH L2 space. It's of course has boosted approximately almost 900,000 active address. So bigger deal there. Remember, don't forget, on-chain summer and part of that big rollout with Base. But the ETH fees were remaining somewhat low. So if you look at what they're saying here, despite the increased activity they witnessed on L2s, ETH's fees have remained relatively low. Okay, maybe, but yet still fees. Nobody liked fees. And I think this is the other benefit that we see with L2s in general going forward. All right, so just to show you an example, this of course is a summary of total value log continuing to climb right now on Ethereum. And I think this is the chain that pretty much everybody understands. It's where everything has been built on, a lot, really the early lead out there. But again, the transaction situation has been the challenge for everyone. So key here, everything going into tokenized treasuries. This sum we've talked about before, now over $1 billion. This will continue to explode. If you kind of zoom in on this right here, you kind of remember some of the videos that we've done. If you haven't watched our Biddle video with BlackRock, watch that, because this right here is what I'm talking about. A lot of action here, and it's just recently been launched. We've done a handful of videos on that. And again, this is just another explanation and reason that we're going to see so much more of this happening overall. Kind of in contrary to what VanEck thought originally, is that tokenized assets wouldn't have a place, but in fact they do. All right, last up here, JP Morgan says Ethereum could avoid the security label amid some of the decreasing Lido share. Now, I don't know that, because Lido hasn't necessarily been decreasing. Sure, it's had a little bit of a fall off here recently. If you look at Lido on DeFi Llama, and I'll kind of zoom in on this a little bit, and we'll scooch over there to, you can kind of see it's had a little bit of a dip right here from TVL of around 39 billion down to around 32. So if anything, that's probably just a up and down that we're going to continue to see in the markets. And again, people would argue that ETH is getting too centralized because of projects and total locked value like what Lido does. But back to JP Morgan, that's kind of their big claim, but they're just saying, hey, this should reduce concerns about concentration in the ETH network. I think that is still going to be not necessarily the bigger play on this. I was talking with MetaLaw about this, MetaLawman James Murphy, about whether or not this could be truly deemed a security, and if it is, what kind of impact would that have? That's going to have impact on the L2 community in a big way. So there's still some risk here overall. The analyst did point out that the network decentralization plays a role in determining the classification of a digital token as a security. So I still think that this falls under the CFTC scenario. All right, wrapping up here, Morgan Stanley wants to beat UBS to become the first Bitcoin ETF bank. The reason I bring this one in is it really talks more about digital assets. And the reason I say that is because this is a good example of how banks are going to start to try to implement more of this. And this is most likely going to happen with Ethereum as well if we get an ETF for Ethereum. So they still are in a holding pattern and compliance game of chicken, waiting for one of them to go first. We'll see how that goes. So probably it'll be an all-at-once type moment when all this is happening. And what I mean by that is, once the banks start to pull the trigger on this, we may see a flood of them start to move in on this. So UBS is planning to add Bitcoin ETFs to its platform somewhere around April 8th and April 12th. So that's next week. That's a pretty big deal, because this will really open up, I think, awareness. And what is that going to do? It's going to represent a roadmap for other digital assets to start to move in this direction. At some point down the road, could you hold, an Ethereum ETF, a Solana ETF, an Avalanche ETF inside your bank? So big news on the horizon here, I think, overall. Again, if you guys are not part of our Diamond Circle, make sure and get in. It's a great place to get additional content. Follow me out there on X at Paul Barron. We'll catch you next time right here on TechPath.